I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving in supply in a scarce, desirable asset that people want to hold for a long period of time. So, well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
Despite its history of ups and downs, Bitcoin has shown remarkable performance over the years. Since 2011, Bitcoin has been the best performing asset 10 times. This track record speaks volumes about its massive potential as an investment. Currently, there is a growing interest in Bitcoin following the introduction of Bitcoin spot ETFs. As Bitcoin surpasses key resistance levels, more people, including those unfamiliar with cryptocurrencies, are jumping in. This influx of new investors is likely to drive Bitcoin's growth further. Currently, the price of Bitcoin is hovering around $51,000, and many experts believe that its price will rise even more in the coming months. After years of investing, Michael Saylor, world-renowned entrepreneur and co-founder of MicroStrategy, remains bullish about Bitcoin's performance in 2024. For this year, he expects a massive surge in demand for the digital asset. According to him, it is quite rare for an asset to experience a substantial increase in demand while also being naturally scarce and desirable for long-term holding. And this is the case for Bitcoin. Saylor emphasizes the significance of Bitcoin spot ETFs, which simplify Bitcoin investment for various investors by trading on established exchanges. Their approval by regulators also adds legitimacy to Bitcoin as a valid investment, attracting more traditional investors who were previously skeptical. Looking ahead, Saylor predicts a supply shock in April after the Bitcoin halving event, where the daily supply of newly mined Bitcoins for sale will halve from 900 to 450. This reduction in supply, combined with stable or rising demand, may create a supply-demand imbalance, potentially driving prices upward. Now, let's take a look at some clips of Michael Saylor as he explains the significance of Bitcoin and why its surge is bound to happen this 2024. As we share these clips, we kindly request your support. Please consider giving us a thumbs up, leaving a comment, and subscribing to our channel. Your interaction encourages us and helps us deliver engaging updates on cryptocurrency finance. We hope you enjoy the clips.
Well, I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique, and it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners. Bitcoin is digital property. It's conveyed by digital power. Those Bitcoin miners are digital power providers, and it's the most powerful computer network in the world. So we see this as profound because there's hundreds of trillions of dollars of wealth in the analog world, and there's no doubt it's decaying. Bonds are losing value because of inflation. Real estate's losing value due to just physical decay. Stocks lose value because of competition and product cycles and acts of God. And so the people of the world, they're looking for a new idea, and Bitcoin is this idea of put your money in cyberspace where it's not going to be affected by weather and war and supply chains and all of the things that have plagued us in the 20th century. No, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. Bitcoin represents the digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it a legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it. They're all factors. Education makes a difference. Institutional adoption makes a difference. The spot ETF news is good news. Loosening of monetary policy is good news. Inflation anywhere in the world drives Bitcoin adoption. And of course, the halving is going to cut the available supply of Bitcoins for sale in half from the miners. And so we've got a confluence of very bullish milestones over the next 6 months. And I think smart money is investing into that ahead of it.
In a series of compelling statements, Michael Saylor emphasizes the deep importance of Bitcoin as a powerful agent of change in finance and economics. Saylor compares economic energy to wealth and capital, stressing that Bitcoin represents a digital upgrade of capital compared to old-style assets from the past century. Money is shifting from traditional forms into digital ones, largely due to Bitcoin's attractiveness as a safe investment that grows in value over time. Unlike stocks, bonds, or commodities, Bitcoin's supply cannot be increased to meet rising demand, making it inherently resistant to inflationary pressures. Saylor also clarifies Bitcoin's classification as a crypto asset rather than a currency, highlighting its role as a store of value akin to gold or real estate. While governments may regulate its use to ensure tax compliance and prevent illicit activities, Bitcoin's inherent anonymity offers individuals a degree of privacy and autonomy in their financial transactions. Let's take a look at more clips of Saylor as he explains this important information.
Economic energy is capital. Economic energy is wealth. And so if you think about the wealth in the world, there's maybe $900 trillion of it right now, and it's tied up in real estate, in stocks, in bonds, in currencies, collectibles, etc. The challenge is that that capital is analog capital from the 20th century, and Bitcoin represents the digital transformation of capital. And your chart you just showed with those ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world. And what's going to drive Bitcoin is, in essence, the conversion of analog capital to digital capital. The killer use case is capital preservation and capital appreciation. And the currency is to the economy what your blood is to your body. And economic energy or money is to the currency what oxygen is to your blood. So common sense says if I keep sucking the oxygen out of the room, if I suck the oxygen out of the room, you're going to either suffocate or freeze to death. And if I keep sucking the economic energy out of the currency, the economy collapses. In the extreme, you get ripped back to Stone Age barter. Right? When the money doesn't work anymore, I have to trade you cigarettes for bullets.
Right.
And the problem with that is the economy becomes 1 million times less efficient, right? If you don't have money, now how many countries in the world have a collapsed currency? 66 are dollarized. There's 180 about countries, there's 130 floating currencies. All of them are weaker than the dollar. The dollar is weakening. Okay, it's like the oxygen is getting sucked out of the room. So Tucker, if I told you the oxygen is getting sucked out of the room and there's an oxygen mask drops out of the ceiling over there, what would you do?
Run for it.
Yeah, put the oxygen mask on. With every other asset on Earth, anything else you can own, houses, gold, silver, commodities, stocks, bonds, when the price goes up, the supply increases. If I increase the price of any stock by a factor of 10, the company issues more stock.
Of course.
If I buy all the bonds, all the municipal bonds, the price of bonds go up, people issue more bonds. Right? If I drive up the price of gold by a factor of 10, people print more gold or mine more gold. Bitcoin's the only thing in the world that's inelastic to price. If the price of Bitcoin triples, you can't make any more. If the price goes up by a factor of a million, you can't make any more. There's a kind of misnomer. People often call cryptocurrencies currencies, but it's not a currency, it's an asset. It's a crypto asset. So you're right, Tucker. If the government thought it was a currency and if it competed with the US dollar or other currencies, then they would take offense and they will suppress it. But on the other hand, if it's viewed as an asset which competes with gold or with index funds or with bonds or property or real estate, just a store of value or silver, then you can hold S&P index funds and bonds, and you can own land and you can own property. The government would simply like you to disclose when you sell it to someone else at a profit and pay your taxes on it, capital gains tax. And if you wanted to wire $100 million worth of property to someone else, they probably want you to disclose that per the AML, KYC. Can be owned anonymously, except as a practical matter, if you want to acquire large sums of it, you have to acquire them on registered exchanges.
Bitcoin was able to reach $52,000, and interest in altcoins has also surged. As a result, the total value of the cryptocurrency market hit $2 trillion last Thursday, a level not seen since mid-2022. Many experts like Michael Saylor credit Bitcoin's recent surge to the growing interest and investment in ETFs. Inflows into Bitcoin ETFs have risen in the past week, exceeding $2.2 billion. With this influx of investment, it's vital to stay informed by keeping up with trends, news, and updates to make wise investment decisions. Understanding why Bitcoin's value is rising, such as the increased use of ETFs, can help predict future trends. Though it's exciting to see Bitcoin's value rise, markets can be volatile and prices can fluctuate rapidly. Doing thorough research, understanding your risk tolerance, and investing only what you can afford to lose are essential practices. With the recent rise in Bitcoin ETF investments, they can be considered as a convenient way to invest in Bitcoin without owning it directly. Despite occasional ups and downs, the outlook for Bitcoin remains promising. With ongoing advancements in technology and increasing acceptance, there's plenty of potential for further growth. By staying informed, diversifying investments wisely, being cautious, and thinking long-term, investors can position themselves for success in the exciting world of cryptocurrency. What are your thoughts on Bitcoin's current status and potential for future growth? Let us know in the comments below. Thank you for joining us today as we explored Michael Saylor's ever-inspiring insights. If you found this video helpful, please consider giving it a thumbs up, leaving a comment, and subscribing to our channel for more updates on cryptocurrency finance. Your interest and engagement drive us to continue delivering informative content. We appreciate your support and look forward to sharing more insights with you in the future. Until next time, happy investing.